In the coming days. For The View on Wall Street, Peter Tchir of Academy Securities joins us around the table. Pete, good morning.
Good morning.
It's the great European contradiction. They want the warm blanket of American security and they want to maintain an economic partnership with a country like China. Is that becoming unsustainable now?
I think even let's take a step back. Let's revisit the sanctions that have always kind of been loosely enforced, not really enforced. Europe has continued to buy Russian, energy products this entire time. So as a starting point, I think, how about we really crack down on the sanctions in place, make sure that's happening, and then maybe push on the secondary tariffs. I think that would be a good outcome from this, is a real commitment to actually enforce the sanctions on the books and move that direction. I think you can put pressure on Russia that way. And secondary tariffs, I think, are going to be harder for countries to swallow than actually enforcing the sanctions agreed to.
When you say enforce the sanctions, you mean the United States or the European Union?
Primarily the European Union, right? They have continued to buy Russian products. They've, looked, I think, the other way when they buy it from Kazakhstan, knowing that it was probably shipped from Russia into Kazakhstan. So I think really enforcing, hey, isolating Russia as much as possible, where their only counterparties really are China and India, would be a good first step. Can China and India support them? And if there's a talk of secondary tariffs, maybe that slows down China and India's interest in dealing with Russia, puts the squeeze on them. Maybe Xi calls Putin. Because I think, our view has been, unless we really do something, to stick to Putin, he's not coming to the table. He's fine with the war. He thinks they're winning. And clearly with the, incursion in Poland, he's a little bit, carefree and is going to push the envelope.
Do you think it was deliberate, what we saw overnight?
It's hard to say, but I think it's definitely an indication that he is nowhere close to coming to the table and doing some sort of ceasefire. He believes he's winning. Every step he is taking is to push the West and set up better, boundary lines in Ukraine, so if and when there is a deal, he can claim more land.
It wasn't just this. We also saw overnight Israel attacking a site in Doha to attack Hamas leaders. This comes at the time as we were getting downward revisions to jobs. It felt like a dumpster fire. Stocks reached record highs. Can you explain that?
I think stocks have been very conditioned to rate cuts equals higher stocks. So I think that's a little bit of the mode we're in. I have to admit, I don't follow Oracle as a company, but their earnings, their projection was really good. So you're seeing that. So I think so long as we continue to spend on the AI, and I do think we are seeing this kind of what we've been calling, national production for national security, whether it's investments in Intel, MP, I think you're going to see more and more efforts by this administration to, produce the things that we need for national security. And I think that's a positive.
Okay, there are positive stories here, but are we conditioned to just ignore geopolitics because it always seems to be overblown at first headline, then calm down? Are we just conditioned to shrug it off and say, if I can't predict it, I'm not going to price it?
Yeah, I think that's a big part of it. So I think this will kind of, and again, we've had enough success, right? Where, we've pushed back on people, they've, pulled back, we've, Iran's been very quiet in the last few weeks. So I think you can see some of that. I'm a little bit worried geopolitically. I do think we are going to try and enforce these sanctions. There will be more chat about secondary tariffs. I think the economy is slowing. I think when we look at, I would say garbage in, garbage out. My background was computer science, right? Garbage in, garbage out. So I don't think we spend enough time looking at the data, right? We take the data and put it into models. I think the Fed's been doing that. Whoa. Let's take a look at this data. We've been complaining about the birth-death model, saying that, right, what this does is take EIN applications, so people looking for new businesses. And traditionally that meant, you were starting a business, you hired a few people. I think now in the gig economy, what it is someone gets worried about their job, says, well, maybe I'll drive Uber on the side or Lyft on the side. They go ahead and get themselves an EIN. So it's not a real job. It's not creating this. The Fed should know this. I think that, or the BLS maybe should know this. That's why we've had that revision. And what really scares me, if you look from April to this year, we've produced 260,000 jobs in non-farm payrolls. We've had 960,000 birth-death model jobs, right? What if those are largely fake? We could be losing jobs in this economy, which is kind of my assessment of where we are. We should be moving aggressively, and I think the Fed and Treasury should combine to do something to control the long end so we don't get a repeat of last September.
Okay, there's a ton to unpack there.
Sorry.
Okay, let's start with rates and then we'll get to the balance sheet, okay, on interest rates. I don't know what's going to happen in the next 24 hours with PPI and CPI, but let's say it's in line. Is 50 basis points on the table?
Yes, I think so. And let's talk about garbage in, garbage out one more time. We still use owner's equivalent rent to track, shelter, one of the biggest components of CPI. There's a huge lag effect on that. First off, go ahead and I dare you to read what OER is. It's painfully confusing. It doesn't reflect reality. And in this day and age, right, the Cleveland Fed has a real-time rent estimate. Zillow has real-time rents. Why aren't we actually tracking that, which is much lower than what the OER is telling us? So I think CPI is overstated. So again, we're kind of garbage in, garbage out, and we've been overstating jobs, making the Fed reluctant, and we've been overstating inflation, making the Fed reluctant. I think both are going to be revised down significantly. If you look at reality, they should have gone 25 already. I think 50 should be on the table.
So that's interest rate policy. Now, I want to give you some credit. You are one of the very few that is really focusing on what could happen with the yield curve, looking out 12 months when we get a brand new Fed. What are you telling clients about what they should be focused on?
I think that people should be putting flatteners on. I think a lot of people expect kind of a repeat of last year where we lose control over the long end when there were the rate cuts. I think Besson and the Treasury are already doing bond repurchases, so I think they're doing some of this. I think there's a lot of room on the Fed balance sheet to do an Operation Twist. So I know Besson's spoken to you. He does not like QE, but Operation Twist is technically not QE, right? It's balance sheet neutral. It does take duration out of the market, so I think that would be something that you could do. Extend there, maybe even switch some of it out of T-bills or short-dated notes into mortgages, right? Because that's been a huge focus of this administration. So I think there are things that Fed could do in conjunction with Treasury that support that long end of the yield curve.
We've been talking about it on this program repeatedly. Listen to what the Treasury Secretary and the administration are telling you. What do they want? It's not just lower rates. What they want, very specifically, is lower borrowing costs and lower mortgage rates. To achieve that, you need more than just an interest rate tool, potentially.
This is the reason why it's so interesting to see the composition of the Fed and just how much the president can get his fingerprints on some of the Fed officials, because they might be more willing participants in Operation Twist or what have you to be creative to get those long end rates down.
Pete, this was very cool. Thank you, sir. Tchir there of Academy Securities.